There is still 18% fear and 18% greed in crypto. We can tell from this that people are still very scared. Right now, we're dealing at one of the lowest points of this whole cycle. We're going back to 2022 when the market was down. Even not long ago, we dropped all the way to 10 on this chart, which is crazy to see. Actually, I think we were at 9 at one point, but that might have been on Bitcoin's Fear and Greed Index, since this is the full crypto market's Greed Index. It's crazy to see this, and I do think that most people overreacted to the recent correction because, again, it was a 30% pullback. Now, we talked about how this is normal in this market during major bull markets, and Bitcoin had already had 30% pullbacks this cycle, but this time everyone just lost it. Everything was crazy. They thought, okay, that's it. It's over. It's done. They thought about April and said, okay, well, it's going to be done for another 2 or 3 months. As I always say, this market is going through a PTSD-like episode right now because we're hearing tariff talks that sound a lot like the ones we had in January and April. You also have a mix of a big correction or slowdown. As a result, many people become scared and start to believe that Masters is going to be shut down, which will make the price of Bitcoin drop even more. To give you an example, hearing all these crazy stories makes you see the market in a totally different way, which is why I said we would bounce from this moment. You should know that the total market value of all cryptocurrencies has gone up by almost 13%. This is an extra $355.961 billion in market value that has been added since the big drop. Once more, this was a very important change. Between the high in October and the low in November, it was down about 35%, which is almost 36%. It was one of the biggest drops we've seen in a long time. If we look at the WIC from this point back to April, it was about 38%, which is why a lot of people were connecting it to this drop. Also, I think it's important to look at these two events side by side and compare them. This time around seems 10 times worse than the April pullback, even though it was rough during that time. I think a lot of people overreacted to this one because there was a lot more money at stake. It's hard to say, but this current pullback felt a lot worse than the one from January to April. I am surprised by that. We will now look at some charts, including ones for XRP and Bitcoin. We will also talk about what the Fed is about to do. But first, I'd like to let you know that another cryptocurrency market was recently hacked. Let's quickly go back to the exchange lists over here. We don't think that these top markets can be hacked because, well, they're top exchanges. A hack was made into the third biggest cryptocurrency exchange by trading volume. That's right. Someone just broke into Upbit and I told everyone on X about it. But if you do want to use a site you can trust and is completely safe, I trust Capital is one of the best places to store your crypto. I list them here: institutional grade security, closed loop system, self-directed control, trade 24 hours a day, 7 days a week, US-based business, and support. You guys should use this. When you put $1,000 or more, you get an extra $100. Along with that, I trust Capital has been a top site in this area for years, with thousands and thousands of great reviews. In the event that you guys want to go check them out, you are more than welcome to do so. Now that that's out of the way, let's look at the coin market cap, which is $3.12 billion. As I already said, we looked at it over here, taking a quick look at the total value of all crypto assets. The turnaround here does feel a lot like the one in April. On the chart, there is a small V-shaped wave beginning to form. Once more, you can't really see it right now. And it doesn't look like it will be the same V wave from back here just yet because it's still very early. A lot of people like Nick were asking me, do you think we're at the bottom here? Or do you believe this is just the dead cat bounce we had back here that went down? Now that you mention it, I think the only reason we're here is because the second weekly candle already shows a bigger move. I really want us to get back on track a bit more here on the chart. Let's say 3.2 trillion if we can close over 3, okay? That would be great. That would also be very bullish. It would show that they are very strong. It would help us get back on track above the support levels from 2024, going all the way back to December. And that would let us aim for some of these previous highs that I've marked on the chart. It will take some time for a full turnaround and bounce, but we are getting there, which is great to see. We're still at level 18 when it comes to fear and greed, though, which is crazy. And even when it comes back to Bitcoin, 22 people are very scared. We were around 11 o'clock last week. Then there are stocks, right? The stock market is still at 7 days ago. That's right, 7. Fear and greed measure in the single digits. That's crazy to see. Also, if you're just looking at the schedule, it was a little longer than April. April had 3 in terms of greed and fear, which is, crazy. Oh, but that just goes to show that this market is driven by how people feel. You see, everything that happens in these markets is based on feelings. The good thing about stocks is that we just broke that loop with the S&P. We're still not out of the water, to say it again. But we just broke the all-time high from November 25th, which is great. We just made the high stronger. It's clear that markets aren't open for business today. Tomorrow they will start trading again. We don't want to see this pattern happen again when we look at this. So yes, we knew this high was going to fall, and it did. We're still taking a look at this because we want to keep building a strong structure. We need to break through this high. This S&P high should be broken next week, but it doesn't have to happen tomorrow. If it does, the market will finally break out and start to reclaim bullish structure. We'll just round it up to 6,900 since it's about 68 or 69. We need a big break above this level. That's what I'm mostly interested in when it comes to stocks, but this is a great turnaround. I really want to see this when we might be looking at whether the markets have dropped, since it's a 4.73% rise from the lows. This is a great sign that stocks are doing well. Look at a few things now, then talk about what the Fed is going to do. That's why everyone thinks the Fed will cut rates. Here at Coin Bureau, we have high odds of a December rate cut. The markets went from expecting no cut to pricing in a 71% chance of a cut in December. Taking a quick look at the CME group, there is a good 86.7% chance that the rate will be lowered now. This jumped. It's from the 22nd. As you know, we're talking about 5 days from now. We got to 69.9% of a rate cut happening again. This comes from the CME group. I think the CME group is one of the best ways to keep an eye on this. There's no need to look at X or anything else to keep track of whether or not there might be a rate cut. The prices we're seeing right now point to a rate cut. At this point, the main thing about rate cuts is that everyone thinks they are very, very strong. I think this is something that's not quite clear in this market. In fact, it's the opposite. It's usually pretty gloomy when rates are going down. The Fed stops lowering rates when the market becomes bullish. To give you an idea, there were about 6 rate cuts before 2020. There were no rate cuts in 2021 from about the end of 2020 to the beginning of 2022. Okay, and this is where we saw a big push to the upside because, as we said, rates were very low in 2021. That's exactly what we want to see here. We want to see another rate cut early in 2026 and then again in 2026. We don't want to see any rate cuts because they usually mean the market is going down. To break something means that it might happen or that something is going on behind the scenes. In other words, when we look at rate cuts, there is a bullish story behind them. Usually we want to see the rate cutting season end and the big bull season begin. You never know, 2026 could be a very strong year for the markets. After that, I've talked about how Q1 could be very good. We have no idea. On the other hand, we saw that JP Morgan thought the Federal Reserve would also raise interest rates in December. The big thing we're looking at is rate cuts, which is why I want to see them slow down a bit by 2026. We'll say it again. If rates get lowered to a good level where they can stay low and everyone loves them, then markets can really start to bounce back in a big way. There is a lot of money coming into some markets right now. It has something to do with cash, right? We talk about cash all the time. The most recent major US MM2 version. Let's just look back at the last 2 months, okay? In other words, we added an extra $182 billion to the US money supply from August to October. Okay, this is a big deal. What we see when we look at this is we can see that we're already printing a lot of money, even though it's only the beginning of the year. Let's go back to the start of the year. The US now has almost $1 trillion more in cash on hand. Rate cuts make it possible to print more money. It makes it easier to make money, which lets more money into these markets. Some people have mortgages with 3% interest rates, which you may have heard of. Why would they give it up? So when interest rates go down, more people who want to buy join the market. This is because it's basically free money. Indeed, this is the reason why we see rate cuts as a bullish sign, but not a positive cycle driver. When they start to level off, that's when people are more likely to want to do things like buy things and throw money into the markets. In other words, I do believe that interest rates will have a much bigger effect on the amount of money in the US. It's going to be like money flooding into certain markets. That's what will really make this market go. Let's talk about XRP again. It's already up 24% from its low point. We've been paying attention to the map for a while now. Resistance has become a bit of a wall for us. I'd really like XRP to go over $2.30 and have a nice daily candle close above that price. That's a good start. Following that, the main goal here is to get rid of some of those previous highs because it's very similar to the S&P, right? We want to make a system that is bullish. We need to break through these lower highs and lower lows because if we don't, the trend will stay pretty bearish. This chart has a lot of highs to clear before we reach a new cycle high. The main goal is to break through some of these levels and create bullish structure again. After that, I'm really looking forward to flipping this 2.75 level into support again by running it up to 2.76. Once more, XRP doesn't look too bad. Good bounce. I just need a little more XRP. Then there's Bitcoin, which is up 14% from its low point. This higher low structure that goes all the way back to April is still in place. This style has been around for a while now. There was a fair value gap that we filled in full. We need to get back 93.5K. That would be great for this week. After that, we can end. The next level we want to reach is about 104.6K. It looks like Bitcoin will do well. The best thing about this market and XRP is that Bitcoin still looks pretty weak. It looks pretty heavy though. That's what I would say. Yes, this might move a little if Bitcoin goes up, but I do believe that Bitcoin will lose its lead, its bottom, and it's going to drop a lot. That could happen in a week or 2 weeks. We're only going to keep a close eye on this. Not so for our wick from November 3rd. It was very gloomy. I do believe that this chart will keep going down, which will also make the market for old coins go up a lot. Now that we're done, I hope you guys like this movie. If you guys really like it, please subscribe and turn on notifications because I'm on free content. Everyone is welcome to follow me on Twitter and join the free list below. That being said, guys, this is Nick. Thanks for seeing. Goodbye.